Andre Cilliers from TreasuryONE. My goodness, this has been a time for the rest of us to tap into your wisdom, Andre, with what's going on in Eastern Europe and the Rand and how it affects our pockets. Maybe let's just start from the very beginning. This invasion by Russia into Ukraine's now been going on for 12 days. If you track back the impact on the South African Rand, it was looking very strong ahead of this. And now, of course, it has almost predictably being impacted.
Yes, certainly. When I spoke to Justin 2 weeks ago on the Monday, I mean, we knew about the possibility of a Ukraine-Russian war, but at that stage, everybody was hoping that there would be still dialogue and it would not happen. It did happen. If we look at the value of the rand at that stage, it was trading around the 15.15 level. But at the same time, against the euro, it was trading around the 17.15, 17.15 level as well. Now, since then, at that stage, one needs to mention what happened to the dollar, because the euro against the dollar was trading at levels of 1.13. It now trades at 1.0840, which is a 4% weaker euro. At the same time, the rand had actually strengthened against the euro by some 2.6%, and only weakened against the dollar by about 1.5, 1.6%. So the rand has done exceptionally well over this period, in the sense that it gained against some currencies, weakened against others. If you look at what happened to the ruble, for instance, the devaluation or the weakening of the ruble against the dollar is in the order of 80% over this last 12 days. So massive moves in the currency space, but also massive moves in the commodity space. Gold, as we speak, just before I came in for this discussion, was just briefly over the $2,000 an ounce again. Was there this morning, came down slightly, but it's there again. Palladium and platinum shooting out the lights. If you look at the palladium price since December to now, then you're speaking, and one should really sit down and hold onto your chairs on these figures, because it's trading around 70 to 75% higher. That's the jump in that space. If you look at the price of coal, coal was briefly over 400. It might be even above that again today, but over $400 a ton last week, from levels of 220, 230. So immense, and this is all because of the energy crisis. You look at the oil price, a 40% move in the last 2 weeks or so. We can now discuss what's the impact of these things, but that's the kind of moves that we've seen.
It's extraordinary when you put it into that kind of context. I was at the in the lockup for the budget. What's it? A week ago, just over a week ago, and there the South African Treasury were getting somewhat concerned about being able to repeat in the next year, in the next fiscal year, the bonus that had been achieved through higher commodity prices. But from what you've unpacked for us, bizarrely, this war is doing South Africa's export earnings a heck of a lot of good.
It does the export earnings a heck of a lot of good. One of the problems that we might incur is, can you actually get the physical exports out and delivered to the other side? That is something that is still to be seen, because if this war continues, it might have an impact on how do you get goods from point A to point B. And certainly, if this continues, then the commodity boom that we're seeing might continue, because the demand will be there. But as I say, the logistics might not be there. But certainly some benefit to the fiscus again on that front going forward. I must honestly say that at this point in time, I'd rather not see the fiscus benefit from a windfall like that, and rather see a war that dissipates and actually unwinds and we get back to a more peaceful situation, because this is certainly not good for world economies, uh, and Europe especially, if this continues.
You made the point a moment ago that the South African rand has strengthened against the euro, but not weakened too much against the US dollar. But just maybe starting with the US dollar and the euro as a beginning point, why would it be that the dollar would have strengthened so aggressively against the euro, beyond the obvious that this is happening in Europe?
I think at the end of the day, this is happening in Europe, and that's exactly why the euro is doing so badly, and also the pound is doing badly. It's mostly a European war, and if this escalates and continues, it will be fought out in Europe, and their economies will be impacted much more than anywhere else. Apart from that, if you also look at the exposure of Europe to Russia, then the whole sanction thing will impact dramatically more on Europe than on the rest. Just for instance, if you look at debt of Russian banks to European banks, the bulk of the debt lies into the European banks. And that's why Europe is so badly suffering, or the euro is so badly suffering under this whole situation.
And the sterling, pound sterling, you said that's also weakened. Why would the British currency, given that they about as far as away as you could get if you happen to be in Europe from what's going on in Ukraine, why would they also be under pressure?
Well, I think they're still very close to Europe. And even though there is and was a Brexit, those two, the European economy and the UK economy, is still very, very closely interlinked. And the bulk of trade between the UK still takes place with Europe. So that's why that would also impact so badly on the British pound.
And the South African rand being relatively strong, is that more a question of benefiting from the commodities or just being far away from all the craziness?
I think it helps that we're a little bit further away, firstly, but most certainly at this point in time, the biggest benefit comes from the commodity boom that we're seeing because of this and the massive increase in commodity prices. Uh, I think what's being left a little bit on the back foot is the negative impact that the dramatic increase of the oil price will also have on our trade balance, because oil remains one of our biggest imports, and hence the actual flow of money in terms of what you need to pay for oil will also increase massively. So, the commodity boom and the oil price, both impacting on the trade balance, the one positive, the other one negative, but certainly the outweighing of the commodity boom on that front, assisting the rand.
So, how do you see this all playing out? Maybe you can give us a short term and a long term perspective on this. In other words, if the war continues for another 24 or another 12 days, and uh, then it stops, or at least there's not the kind of um, television um, visuals that we're seeing, or if the
If it stops
Ukrainian
within
people continue to show such great defense, and it continues grinding away almost indefinitely. What are those two scenarios looking like for you?
If it continues for the next 10 to 12 days, I think the impact will be minimized, in the sense that commodity prices and all these things will return to lower levels and more acceptable levels, and the oil price will retreat to lower levels, uh, and a crisis will be averted. If it continues longer and it goes on for weeks and months, uh, I think it's a very, very negative picture for the world, and in terms of what happens to world growth. I think it will be an extremely negative picture in terms of what happens to inflation rates throughout the world, also in South Africa, and the impact of what that have on interest rates, and the value of currencies. But moreover, the massive increase that one can expect then, and shortages that could start coming in terms of certain foods, the shortages of energy, oil could go even further. That could go much higher then. Fuel prices could go much higher. That will lead to massive inflation on food. But you might actually physically see shortages. You will see an impact on our export side. We are a great exporter of fruit, a big exporter of fruit to Russia. Um, from what I've read, some 12% of our apple exports is going to Russia. So industries throughout the world, companies throughout the world will be impacted by sanctions, and companies around the globe will start suffering. And as I say, shortages will come in, leading to impacts on both price and inflation, and ultimately interest rates. And that obviously to world growth. So a longer duration of this war would have very, very negative impacts, and spells doom and gloom for consumers around the globe, especially in Europe. And then I'm not even touching on what happens if the war escalates to a bigger and wider war that might span outside the borders of Russia and the Ukraine.
It's a very sobering picture that you've painted for us, Andre. But how are you advising TreasuryONE's clients who are exporting on the one hand and importing on the other?
Well, my advice has always been, and it will always be, to not follow an approach of trying to get the maximum rate or the minimum rate or whatever, either being exporters or importers, but to manage your risk. What makes it extremely difficult now, especially is if you're exposed to markets in Russia with imports and exports, is that your volumes changes substantially, which could influence the amount of risk that you are exposed to in terms of certain currencies. And you'll have to find new markets, and though new markets might not pay you in dollars, they might pay you in other currencies. So the composition of your uh, total exposure uh, looks massively differently or potentially differently, and also smaller. But from a solid, proper risk management point of view, is look at hedges that bodes well for you and that gives you certain scope and maneuverability in terms of levels, and be cautious of just trying to take advantage of a high exchange rate and then leading into a situation where you actually accept more risk than you really want on your books. So every individual company needs to look at their own situation and discuss their own situation with either us or their advisors, uh, because there's not a one fit for all in this whole scenario. Uh, every company would be differently exposed, and one would have to analyze that risk and make sure that you steer through these volatile periods, try and get rid of some of the volatility, but be able to steer through these volatile times without affecting your bottom line too much.